Good morning, good afternoon, good evening. Welcome back to the channel where we talk about economics and crypto and lots of other fun things. There's more of an economic focus in this video, but of course I'm always going to start with Bitcoin. But before we dive on in, do me a favor, hit that like button, turn on the notification button, hit the subscribe button as well. Comments are always appreciated. Do your thing, but otherwise let's go ahead and dive on into this. A chart that I've never seen before, really interesting to me. Quentin, one of my favorite new accounts that might be taking charts from other people, but anyway, and not giving credit. But anyway, Bitcoin is going according to plan. Here's a chart I've never seen. So what do we have here? DXY, 3-month percent change, advanced by 3 months, inverted. So 3-month lag, Bitcoin 3 months percent change in real time. So this is not a Bitcoin price chart or DXY price chart. It's the change in percent. And for the DXY, it's inverted because that tends to happen, right? You know, I've shared charts sharing a lagging indicator between the DXY and the price of Bitcoin, and that we maybe in the middle of a 49-day or at the early stages of a 49-day uptrend in Bitcoin. You can see there's a correlation here, not 100% correlation. I mean, look at this time in 2024 when Bitcoin just kind of deviated from that. But if we were to go along with what this inverse DXY chart gives us, then we still have higher to go. Now, there's a lot of things, right? There's a lot of reasons to expect Bitcoin to go higher than where it is right now. But if you saw my video from yesterday, I am now in a mindset that I'm expecting some kind of a short-term chop before another move higher. Maybe this will take a month or so for Bitcoin. Now, altcoins are being kind of resilient right now, and Bitcoin's dominance is going down. So maybe even during that chop, we could see altcoins to do pretty well. We'll have to wait and see. But like I said, this is really fascinating to look at. But moving on, so Axel Adler, I just can't get enough of his charts. We have seen some pretty heavy sell pressure from bears, from short-term holders, in particular over the last 5 days. And you can see that here, Bitcoin cumulative net taker volume. Net taker obviously being sellers. Sellers are takers. And over the last 5 days, as Bitcoin's price has been going down, has been chopping down, you can see some very heavy volume in comparison to any point in the last month where there's just a lot of selling volume at 1.3 billion, 800 million, lots of selling. And even, you know, we have the spot Bitcoin ETFs that are buying a lot of Bitcoin, but believe it or not, you know, that doesn't matter if there's more selling pressure, and there has been a lot of selling pressure recently. So the last 5 days, of course, you know, last 5-6 days, the selling pressure is greater than that what we see with the spot Bitcoin ETFs, but the ETFs are accumulating still. So cause for concern? No, not necessarily. But this too will pass. This shall pass as short-term holders by and large take profits. Moving on, another chart that I found to be very interesting that I've never seen before. Bitcoin related. So what are we seeing here? Rolling correlation, 10-year UST future. And we can see Bitcoin and gold on this chart. So attention, this is probably the most important macro chart for Bitcoin right now. Bitcoin's 60-day correlation to US Treasury, 10-year Treasury futures has declined to the lowest level on record. Are traditional investors selling US Treasuries to buy Bitcoin? Really interesting to see all of that. And it is a sign of the times that we are in, that this correlation, it's lower than it's ever been. And could that conclusion be right from the first time ever being featured in my video here? Andre Dragosh, PhD. Are they selling treasuries for Bitcoin? That would be, that seems to make sense to me. Who's they? It's just, you know, it's not everyone. It's some people. Some people who have shared, you know, perspectives that people who have been comfortably holding treasuries over the last decade, 2 decades, or maybe even longer than that, are getting a little nervous. They're I don't know, you know, is this a safe haven? anymore. And so perhaps they're fleeing in a different direction, fleeing to gold, as we've seen the gold price of gold go pretty wild, but also fleeing to Bitcoin, as Bitcoin has hit a new all-time high within the last week. So moving on, United States first quarter GDP revised up, only declined 0.2%. Investment was revised up, and consumer spending remains strong. Private sector strengthens. Those are the kind of the things that I want to see in the United States. And you can see what's a big piece of this pie is imports went down significantly in the first quarter. Not shocking, or they were very heavily negative in the first quarter. That's not shocking. And are we going to enter a recession in 2025? You know, that point of view is being challenged. When the Atlanta Fed projected that we were going to have 3.1% negative GDP, I would have told you with a great deal of certainty that we were going to enter a recession. But the first quarter only being negative 0.2 with all the tariff drama and everything, it seems likely to me that the second quarter would be positive, and by definition, that's not a recession. But you know what? Hey, they made an exception when Joe Biden was president, even though we had 2 negative GDP quarters. Maybe they'll make an exception with Donald Trump president. Like, nope, one negative GDP quarter is enough for a recession because we hate you. All right, that was kind of weird. Moving on. So, hey, this is a good sign. This is a good sign for potential V-shaped recovery, all of the above. From Stack Hodler here, very important. I mean, guys, I talk about the bond market very often because this is not an enjoyable experience watching the bond market doing what it's doing right now. It's actually quite scary. And so what does that mean? Ultimately, that's very bullish for Bitcoin. That's very bullish for gold. But volatility at some point, there will be a reckoning with this. But it moves slower than what we tend to think, what we're used to as crypto investors. So let's read this. If you're an investor, you need to understand the Trump admin made lowering the 10-year their primary goal. They were going to use a combination of tariffs for revenue and Doge for spending cuts to show the bond market they were serious about cutting the deficit. They failed, and now the deficit is set to increase. This is beyond politics. I know Trump's going to get a lot of blame for this. This was inevitable. I am telling you, this was inevitable. If you're still cheering on a team or blaming this or the other side, you're missing the point. This is math, and it's just history repeating. If we skip to the end, this ends with massive currency devaluations. Did you hear that? A global reordering and investors rushing into assets that cannot be printed. There's still $7 trillion sitting in money market funds. All of that will eventually rush into something that can't be printed. And as the only credibly finite store of value asset, which has consistently outperformed, Bitcoin will ultimately be the biggest winner. Keyword ultimately there. Here's where it gets crazier. Everyone knows they need to print, which means people are rushing to take on even more debt because it's free money that they can use to lever up for the inevitable. We're seeing it with Bitcoin treasury companies and individuals. Are we not? It's like explosive growth of Bitcoin treasury companies, and it may not stop. I don't know how it ends, but they've already shown they won't allow a debt collapse. And with AI a looming threat to vast swath of white-collar jobs, the debt-laden professional class threatening to default due to loss of income could end up being the domino that tips the fiat into the fiat house of cards. The amount of currency they will need to print to effectively reset the debt system is going to be mind-melting. I've talked about this. They are stuck. The Federal Reserve is stuck right now between a rock and a hard place. They either need to print. I'm being absolutely serious when I say this. 14 digits. Let me do the math here. Trillions. Yeah. So 14 digits, like 10 trillion or more, maybe even tens of trillions. Let's just say 10 trillion for now. If they want to bring down the bond market, bring down yields so that they can lower rates, so they can reset their blah, blah, blah. All right. They need to print trillions upon trillions of dollars, or they need to crash the economy. One or the other, that's all that they have. Now, they're pursuing things with stablecoin regulation. Stablecoin issuers have a lot of incentive to hold treasuries, but otherwise, yikes. I just don't know, man. I don't know. Both options. So you're going to print a lot of money. All right. You know who's going to suffer? The middle class, poor people. Oh, yeah, they're going to suffer a lot. Or you crash the economy and everyone's going to suffer. But at least that would be like vomiting. You know how you feel better after vomiting? That would be a vomit of sorts. That sounds good to me. I mean, I don't want to go through a crash. I don't think I'm going to do well enough shorting the market. But anyway, speaking of fiat currencies, here we have, there are now 9 U.S. companies with a market cap above $1 trillion. I talked about this in my video from 2 evenings ago, but 9 U.S. companies with a market cap above $1 trillion. Microsoft, NVIDIA, Apple, Amazon, Google, Meta, Tesla, Broadcom, and Berkshire Hathaway. A decade ago, Apple was the largest company in the U.S. with a market cap of $750 billion. So where's Apple now? It's 3 times that, almost $3 trillion. Microsoft and NVIDIA have outpaced Apple since then. But, I mean, think about this, guys. Does this mean that Apple has innovated enough that, you know, that they're now, they've done such a good job growing their company that they're now worth 4 times as much as they were worth in 2015? Absolutely not. Not even close. This is a sign of money printing and Apple just showing you the true rate of inflation. I mean, aside from, along with development, so it's not really the true rate of inflation, but yeah, Apple has grown in revenues and things like that, inflation regardless of that. But this is just a sign of the times. And I talked about in that video from 2 evenings ago about how just, my goodness, there are valuations that you guys, you're not going to be able to fathom that are coming down the road for Bitcoin, which is $2 trillion, above $2 trillion, you know. 20 years ago at this time, the idea of a $1 trillion company was almost non-existent. And yet here we are in 2025, we have 9 $1 trillion companies. Who knows how many $1 trillion companies we're going to have 10 years from now? I wouldn't be surprised if it was 100. And I wouldn't be surprised also if there were some $10 trillion companies 10 years from now. And I wouldn't be surprised if if Bitcoin was one day a $10 trillion asset. I very much expect that. That's a $500,000 market cap. But I also, you know, the number that sticks out to me that I'm just like, oh my goodness, that's unfathomable, would be a $100 trillion Bitcoin market cap wise. What is that? That's $5 million. That's coming. I have very little doubt about that. Not because I know I'm a huge believer in Bitcoin, but I'm less of a believer in the US dollar. Bitcoin Infinity is the final price. So this was a fascinating chart to me just to see how this has played itself out. But sign of the times, man. All right, last chart we have why. And this is annoying to me because I was a bear. I've been a bear for post rate cuts for quite a while, and I still am a bearish. Although, are we going to have a V-shaped recovery? At some point, I'm a mega bear. Don't get me wrong on that. But why? This doesn't make sense to me. It's not like consumers know about the bond market, okay? That's the thing. All right. Do I have reasons to be terrified right now for some point in the near-ish future? Yeah, near-ish being next 5 years. But consumers are dumb. You know, they don't pay attention to the bond market. So from Decode here, consumer confidence is currently the second lowest since records began in 1952. Really? Come on, is it that bad? The best analog I can find is Q2 1982, where we have a similar shape in the oscillator and a second dip in confidence. This time that second print is significantly deeper. Extraordinary that Bitcoin is an all-time high, but not so extraordinary that no one cares. I would flip that. It's extraordinary to me that no one cares. If I'm understanding what he's saying here. So what we should see here, this is an overreaction. This is CNN people watching CNN too much, MSNBC, CBS News, all of that, and being more scared than they should be right now. Even though in reality things are really scary, but they're not smart enough to know that. This is an overreaction. And so that makes me think that what we possibly should have ahead of us is a rise in consumer confidence, which are going to have a rise in some consumer confidence. Maybe we still have some time in the stock market and in crypto to make some decent gains. But again, at some point, there is going to be a reckoning. So interesting times that we live in. Money to be made, but interesting times. Anyway, that's all I have for today. I hope you have a wonderful day, a wonderful rest of your week, and I will most certainly be seeing you in another video. Peace.